everybody, and welcome to the Business Growth and Entrepreneur Podcast. I am Bill, the company's expert, and today we're going to talk about investment and financing for startups. So, if you are someone who has recently started a startup, or you are thinking of starting a startup, and probably one of the first big questions on your mind is, how do I get money to do this? Then you'll want to listen to this podcast. Now, I received a question on my main YouTube channel by one of my awesome viewers / listeners, and this person is called Unable to Connect. That's an awesome name. That inspires lots of confidence. And Unable to Connect says, how would a small startup seek investment? Would like to know. Okay, excellent. Well, listen, I have spoken about this before, and I already have a few videos on both of my YouTube channels, The Company's Expert and The Company's Expert 2, that have covered this, but they're quite old. They're like a couple of years old at least, so now is a good time to do a new one. And let's see, where to start? This is a big topic. Now, speaking as somebody who has advised many startups, and I know from experience that this is probably the number one question on a lot of startup founders' minds when they go in, is they want money. They want money to spend to do their startup. And there's a couple of legitimate reasons for this. One is they want an income replacement so they can pay rent and survive while they're doing their startup. The other purpose for this is, of course, to fund their startup. So if they're investing money into the startup to pay for equipment and in some cases personnel like employees, and things like office space and things like warehouse space and supplies and blah, 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 all this kind of stuff, right? So there's a couple of reasons for this. I know this is a very popular topic. However, in my experience, okay, people don't like to hear the reality of this, okay? And the reality is that if you don't understand money, okay, if you're not an accountant, you're not a financial manager, you're not anybody who has studied money, either in financing or accounting or business, you are a little bit out of your depth. And the first priority is, if you want to deal with money, is to learn about money. So I highly recommend that if you haven't started your startup yet, this is a great opportunity for you to learn about money, okay? Because if you're going to be borrowing it and you're going to be managing it, you really need to know what you're doing, because in a way you're kind of playing with fire, okay? People don't like to hear that, but that is the reality. I've seen many startup founders take out essentially loans where they have to repay it. And it just, unfortunately, it destroys their entire startup experience, okay? And I'm trying to help people avoid that situation, because if you take out a loan that you have to repay and you start a startup and you don't really know what you're doing, and that's okay, because nobody really knows what they're doing when they start either, okay, myself included, but you learn over time. But the problem is, if you got to pay back loans, that really puts a time limit on when you have to learn things by and when you have to succeed. And the problem is that if you don't hit a hole-in-one on your first attempt, then you're stuck with a bunch of loans you've got to repay, and it pretty much kills your life as a startup. It's very hard to keep going in the startup world when you gotta pay back money. A lot of startup founders are starving in the beginning, but then they find success and they make money later. The problem is, if you get taken out of the game in the early stages, you never get to later where you find the success. This stuff takes a while to learn, and it's a great thing to want to learn. And I applaud you. You are, in many ways, you are taking on the heavyweight challenge of business. Okay. And if it works, you really clean up. You are riding the gravy train. You have your own business. You get to control your own destiny, and there are no limits on the amount of money you can make for yourself if you get it right. Okay. So that's wonderful. The problem is that in order to get there, you really have to learn a lot of different things, and the money dimension is only one of those things, but it has to be there. Okay. I'm speaking from experience here. Now, You know this is coming. I'm going to get it out of the way. Okay, I have a course called the $100 MBA, and for $100, you learn essentially everything you would learn in a Master's of Business Administration. One of the topics you would learn in an MBA is finance. Okay, so if you want a real crash course in this, one quick and easy way to do it is to take my course, and then you're going to be reading textbooks and things like this, but that will teach you about money. Okay. You got to put the work in my opinion. I've seen many people that jump in not knowing anything and they get screwed and they make bad business decisions because they don't know how things work. Okay. So this is one way of bridging that gap in your knowledge so that you jump into this informed. Okay. So now that that's out of the way, there's a link in the description box to this video to that course. If you're interested, no pressure, but it's there. Okay, now let's get into this. Okay, let's start in a little bit of a sort of slightly academic way, and then we're going to get into the practicalities of this issue. Okay, when we're talking about investment and financing for startups. Okay, here's the deal. Okay, let's start with what they teach you in a classical sense, and then we'll get to the practicality. So number one, there are several sources where you can get money, okay? And these are the sources available to businesses, okay? Businesses have more places they can go to get financing, to get money, okay? People have less options. A lot of these are not available to individuals. They are only available to businesses. And a lot of these are only available to very large businesses, okay? But these are them, okay? The number one place you can go is personal funds, okay? You spend your own money, right? So you make money at a job, you save it in the bank, and then you use that, okay? Number two is friends and family, okay? These things are not very sexy, but they are there, okay? The number two source of money is your friends and family. You go to people you know who know you, and they will invest in you because they know you. They're not investing because they believe in your product or your service or your company. They believe in you, and that is reason enough for them to either give you money or more likely lend you money, okay? So that's the first two sources, personal funds and friends and family. The number three source of financing is commercial bank loans. Okay. What this is you go to a lender of some kind. And in most countries, we have a lot of banks, usually the ones that service individuals. They service the public. Okay. And these are commercial banks, okay, and they give out loans, right? They give out loans to businesses. They can also give out loans to individuals, okay? But this is the third source of financing that you can go. And that's actually one of the most popular sources for startups that are just starting, okay? Number four is government, okay? A lot of times this takes the form of grants where they give you the money and you don't have to pay it back, or loans where they give you the money and you do have to pay it back, similar to a commercial bank loan, but there might be a lot more favorable terms and things like this, okay? So if your business fails, then you don't have to pay it back and things like this, okay? So there's a lot of sources there, okay? That's a whole universe of different things you could explore, and some people do. Okay, that's the first four. Now, the fifth one is angels and venture capitalists, okay? Angel investors are wealthy individuals who invest their own money, okay? So the first distinction here is that they are not lending you money in most cases. Instead, they are partnering with you. So they are investing their money with you. Now, for the people just starting out, this is a very important distinction. You need to know the difference between a loan and an investment. Okay, so debt and equity, loan and investment. A loan is when they give you money, but they expect it to be repaid, and they don't care about your story. You know, if your business fails and you no longer have the means to pay them back, they don't care. Okay. Usually the way this works is you are required to put something up as collateral, okay, to secure a loan. Okay. And in fact, unfortunately, a lot of the government programs and certainly a lot of the loans you will get from commercial banks, they are secured against an asset of yours. So like you put up your car, or in some cases you put up your house, and what that means is that you better pay these people back. They don't care if your startup venture fails. They don't care what happens to you. All they want is they want their money. And if they don't get their money, they take the collateral. They take your car, or they take your house, or whatever it was that you put up as security. Okay. So that's debt financing. Okay. That's where they lend you money. These are angel investors. Angel investors, for the first time, they are not lending you money. They are investing money. So what that means is they are going in with you. Okay. They are taking the risk. And the big difference here is that if the business fails, okay, you would lose all the money that you invested in your own business. Okay. Anyone who invested money in your business too and became a part owner of it with you, like a partner, like an angel investor, they would lose it too. They would lose their money too. Now, the good news is that you don't have to pay them back, right? But the bad news is that now they don't like you. It's hard to go back to them and say, I know that first venture failed. You believed in me and then it failed and you lost your money. But I got a new plan and I'm going to do this again with a new idea. Are you going to go in with me? Chances are they're going to say no. There's exceptions to that, but that's kind of more of the rule than the exception. Okay, so those are angel investors. Okay, they deal with usually businesses of a certain size. Okay, some angel investors will deal with startups, like businesses in the startup phase. Okay. Other angel investors will only deal with businesses who are further down the path. Okay, so they're in the growth phase or the maturity phase. And those are defined by, have you released a product yet? Have you launched yet? Are you bringing money into your business by selling your thing? Okay, so depending on the type of angel investor, they will invest in you. They will partner with you if they believe in you and or your idea, usually both. Okay. And we're going to talk about them later on. Okay. Now, the other kind of class of people here are venture capitalists. Venture capitalists, they don't invest their own money. They are the equivalent of sort of like super bank managers. Okay. What they do is they invest other people's money. So they get a group of rich investors together and they put all their invested money into one giant fund. Okay, it's a pool of everybody's money. And then the venture capitalist will then take that money and invest it into usually many startups. Okay, now startups are very high risk. Okay, and the reality is that in a group of 20 startups, it is not uncommon for 1 to succeed, but 19 to fail within 1 year. Okay, so that's kind of the odds, right? That most startups face. So if you have a 95% chance of failing, okay, the one startup that succeeds, that has to pay for the 19 others in order for this whole thing to make any sense for investors. Okay, so that's usually how that works. Okay. Now, venture capitalists, usually they will not deal with very, very small startups. A lot of times you kind of have to be in the growth phase. You have to have launched and be bringing money in for them to sort of want to deal with you. Okay. Not always, but that's a common scenario. But anyway, that's the fifth source of financing. So far we've got personal funds, friends and family, commercial bank loans, government, and angels and VCs. Okay, so those are the first 5. Now, the rest of the sources of financing, these are usually only available to very large businesses. Okay. The sixth one is selling bonds. The seventh one is selling stock. Okay. The eighth one is commercial paper. The ninth one is banker acceptances. And the 10th one, which isn't really a source of financing, but technically it is, it's bankruptcy. Okay. So for various reasons, we're not really going to talk about those because they're not really an option. Okay. So those first 5 sources of investment and financing, basically we're talking about capital. If you're not familiar with the term, capital means wealth, okay, which means money. Okay. So we're talking about capital, and wealth can be either investment or it can be like a loan, basically debt. Okay. So we're talking about raising capital. The sources of capital that are applicable to startups are those 5. Okay. So that's kind of the textbook way of doing this. Okay. I need to get that out of the way first. Now let's see, what would be a good sort of segue here? Let's talk about sort of more of the reality of a startup. Okay. Now, I'm going to start with sort of my experience on this. Okay. There's a lot of people out there that'll talk to you about networking events, pitch competitions. Okay. Networking with potential angel investors, high net worth individuals, and that kind of thing. But I don't really want to repeat too much of that here. I will skim over that. But first, I want to give you sort of my experience. Okay. My experience in the startup world has been that the biggest killer of a startup, okay, the biggest external factor that kills your startup is the financing component, because people run up debts, they need to repay them, they can't repay them, their business unwinds. Okay, that's basically what it looks like. For the startups that don't take a ton of money right up front, they are given the gift of time. Okay, so that means that you don't have as much pressure on you figuring out what works and learning your business. Okay. The reality is that a lot of companies start and they go through several iterations. You start with one idea. Here's what I'm going to do, and this is how I'm going to make money. 99% of the time that turns out to not work out. Okay. Either you couldn't create the product or service, or you created it, but it just doesn't sell and you don't know how to sell it or get anyone to pay for it. Okay. It doesn't work out in reality like you thought it did in your original vision. Okay. That's just not working out. So you go back to the drawing board and you pivot, you tweak your original idea. Okay. And, you then try something else, knowing what you have learned on your first attempt. You then incorporate that into a second attempt. You pivot your product or service, you change it slightly, you perhaps find a different way of selling it that could potentially work, and you try that. Now, I just want to make the point that a lot of startups that get, especially a lot of debt financing, loans and things, they don't even make it this far. Usually by this point, they're dead. They've run out of money, and they have to pay back the money, and they got nothing. Okay. Either they couldn't complete their product, so they have nothing to sell, or they complete it, it doesn't sell. And either way, they're not bringing in money, and that's it. It's all over. Okay. But for the ones who kind of manage this properly, usually the ones that start very, very lean. Okay. They don't, rent a ton of office space. They don't print the business cards. They don't hire 5 students to do a lot of the technical work. They don't put together a sales team that they got to pay hourly rates for. They don't require a ton of expensive tooling and materials to launch their offering, whether it's a product or service. Those are the ones that tend to make it this far. Okay. So they get to the point where they pivot. It's very, very rare for a startup to have an original vision. They accomplish the vision. They launch, bam, they make $1 million. That's extremely rare. In fact, I have never seen that in the wild. I've never worked with anyone that succeeded that way. Usually the people that do succeed, they have to pivot 2, 3, or sometimes even 4 times. before they hit on that winning combination that involves producing something that they can produce and selling it in a way that they can sell to a market, to like a group of potential customers that want it and will pay for it and recognize its value, and bam, success. Okay. So that's what it looks like. So when a lot of new sort of startup founders come to me and they say, well, what should I do? How do I get money? My first kind of thing to them is like, look, it would be wonderful if you could tweak your vision or try and, employ your brain here to try and come up with a variation on your original vision that minimizes the need for money right at the beginning. Okay. Is there some more stripped down version of your vision that you could do without needing a ton of cash and a ton of resources that you don't have, where you could still produce something and then you could jump to the marketing stage, okay, where you're trying to sell it? In fact, some of you guys that have been listening to my podcast and have watched my YouTube videos, that for me, the holy grail, the goal is to be able to even start the marketing phase before you start the operations phase, before you create the thing you're trying to do. See if people want it. See if people will pay for it, because you're going to have that problem at some point. Wouldn't it be great to have that problem now, so you try and solve it now, before you spend $150,000 producing something and then realize that, oh, I can't sell this thing. Nobody's buying it. Nobody wants it. I don't understand, right? Wouldn't it be great to solve that problem at the beginning before you're $150,000 in, then dig yourself into a hole, owe money to lenders or have a bunch of investors that, are depending on you, they believe in you, and then you have to let them down. And by the way, once you bring investors in, things get complicated because they want their say, and you're having to check with them and, consult with them and all this kind of stuff, right? It really complicates things. So wouldn't it be great if you could do it yourself at the beginning? Okay. So that's the first thing I try and talk startup founders out of. And I've done this so many times. Usually it doesn't work. Okay. Unfortunately, this seems to be something that people have to learn the hard way. And I just hope that when they learn it, they're not so much in debt that it kills their ability to work in a startup after that. A lot of times I've seen people, they just say, no, I'm out. I have to get a proper job and make money. I got rent to pay and bills to pay, and I just can't do this anymore. It's too risky. I can't just go another year without, not really making that much money. So, okay. So that's kind of the first thing I do. However, there is there's a couple of things you can do. Okay. Now, before you get to the point where you've launched a thing, okay, an offering. An offering means either a product or a service. It's something you sell. Okay, whatever it is that you're doing. Software is somewhere between a product and a service. It's kind of a hybrid offering. But most things are either a product or a service, or you're selling some combination of that. Okay. So before you get to the point where you've completed creating your offering, that's called the seed stage. Okay. And so what you're looking for is what's called seed capital. Okay. Now, depending where you are in the world, you may be in a region of the world where there is a lot of lenders, okay, a lot of investors that will invest in the seed stage. Okay. There are a few hot spots in the world, like Silicon Valley, probably being the most famous, is that that's where a lot of the financing is located. Okay. So it's no coincidence that, a lot of the companies that succeed are in Silicon Valley or in these hot spots. Okay. If you are in other parts of the world, you are in a sort of void, an area where there is no real industry built around seed capital or, financing startups. Okay. So it's like being in the fashion industry. If you're in the fashion industry, There's a few hotspots in the world. You might want to go to Paris, right? That's kind of the center of the fashion industry, or New York, right? If you're stuck somewhere out in the boonies, out, in a place that's like really far away from those hotspots, you are at a big disadvantage. Okay. So that's something to know. It's very hard, becoming a fashion superstar when you're stuck all the way out in, some place far away, from those bright centers of the industry. Okay. That's a reality. The fashion industry is like that. The music industry is like that. The film industry is like that. Many industries are like that, and startups are no different. Okay. So that's something that a lot of startup founders need to realize at the beginning. If you're really serious and this is something you really want to do, and, you're absolutely heart set on doing this, and you've shown some talent, and, people have started to recognize it, it might be worth your while to move to those bright centers, because that's where the resources are for a lot of these. Okay. That's a big part of the discussion. It's something that a lot of people gloss over or don't mention at all. I think it's very important. So I'm just going to throw that out there. Okay. But that's kind of the reality. Okay. Now, what you can do, the most obvious, kind of the default thing for a lot of startup founders, is government grants and loans. So let's talk about that. There are many, depending where you live and what country you're in, et cetera, there tend to be a lot of possible grants and loans that come from the government in one way, shape, or form. Okay. A lot of universities, for example, have their own grants and loans for startup. They might have pitch competitions for startup ideas, and the prize is some kind of seed capital. There are a lot of government programs that you can apply to. A lot of times these are kind of hidden a little bit. So it helps if you have someone that can navigate that for you. A startup incubator would be a source where they can help you navigate that a little bit. They can point out what loans and grants and programs they have out there that you could maybe apply for. But you don't absolutely need them. You can search online. You can uncover a lot of these. Okay. But it does help to have a guide. Okay. Even talking to somebody in the startup industry in your region, like maybe an advisor or someone like that, can help, like a mentor or whatever. They may be able to help you with that. There's usually people that can navigate that. Or you could just call someone at the government and say, hi, what is there a sort of hub that can help me navigate the world of government funded grants and loans for startup businesses in my region? Okay. There's all kinds of stuff, the problem is I find that really navigating that world, it becomes a full-time job. And I've seen other startups fail because their CEO, like their principal founder, spends more time doing this than they do actually working on their business, like creating their offering and trying to sell it. Okay, that's the problem, and that's the trap, in my opinion. Okay, so that's the danger with this. You can easily get in too deep, and then the other trap I've seen is that businesses fall into this kind of holding pattern where they are perpetually funded by grants and loans. So they don't actually get to the point where they launch their product, or certainly to the point where they can bring in revenue and maybe even bring in a profit. They never get there. They're perpetually in the state where they're going from loan to loan, grant to grant to grant to grant, and it never ends. And in my opinion, that's failure. I mean, you're surviving, you're existing, but you're not doing what a business should be doing, which is making money. Like if you're not making money, you could argue that the business has failed. I mean, how long is long enough to where you should have made a profit? 2 years? 5 years? If you haven't made a profit in 5 years after launching, I think that's honestly a failure. Okay, so just because you can keep your business on life support with grants and things, that is not really what it's about, in my opinion. Okay. So you could look at incubators and accelerators. They have a role. One of the last videos I did recently was talking about startup incubators and accelerators. I don't have a very positive view of them because of my history of involvement with startup incubators and accelerators, particularly incubators. I find that often they're run by the government, and the last people that understand, pure capitalism, like how to create wealth in a startup form, the last people that understand that are government employees. Okay, that's what I found. And so they really tend, in my experience, they tend to be clueless of what to do. And that shows in the results that they get. But I know some people that have succeeded in it, so all the more power to them. There's also other dimensions to this. You get different government programs that will give grants and loans for startups that are at different stages of development. Okay. And you get the seed stage, where they're sort of in like the early stage, like the idea stage, where you haven't created the thing yet, but you're ramping up to create it. You're getting your resources together, possibly hiring people, things like this. Okay. There are some government programs that will give grants and sometimes loans for businesses at that stage. Okay. But then the problem is that after that early stage, that idea stage, there tends to be not a lot of programs that will fund you until you get to the profit stage. Okay. And that's the problem. So let's say you launch your product, but you don't immediately manage to sell it and sustain yourself through sales. At that point, there's not a lot of sources of capital. Okay. The irony is that if you do sell your product, like once you've launched it and it turns into a success and you're making a lot of money and you're in the growth stage, then there's a lot of programs that will fund you. Okay. This is called the Valley of Death. It's been talked about extensively, where, between the early stage and sort of the mid-level stage, you really don't have any sources of funding. Okay. So you have to quickly go through that growth stage, or that intermediate stage where you've launched, but you're still trying to get to the point where you're profitable. Okay. And then after you make it through that, if you're a success and you start making a lot of money, then everybody will throw money at you. Okay. So that's the irony. There's not a lot of people that will believe in you and invest in you, until you yourself are successful. But usually when you're successful, that's generally when you need money less, because you're making it, right? If you want to be the archetypal tech startup where you then have to bulk up considerably and take over the world, that's usually where you could use additional financing and investment at that stage. But for most businesses, you're not trying to, grow to be 100 times what you were last year. You don't really need it at that point. And then the whole thing becomes moot. And it's actually a good thing to, how can I put this, to not take it, because with every investor that comes in, you lose a percentage of your ownership, right? As you bring in more partners and they invest more. Okay. Sometimes it's a good problem to have, because it means that you're going places. It can mean you're going places. I'm a little bit cynical. I have a master's degree in finance, but I'm not one of those people that just looks at everything through the lens of finance. I've seen a lot of people get money thrown at them at that stage. And it feels really good and it looks really good. But the problem is that they should really be focusing on their offering. You should never take your eye off the prize. The prize is your offering, your product or service. It has to be as good as you could possibly make it at all times. It has to adapt, and it needs your constant attention. And quite frankly, a lot of the financing side of the business is a really big distraction. That's all it is. Okay. People give you money, which is good to a point, but then they want control. They will interfere with you. They will place demands on you. You no longer are in charge of your own thing. And quite frankly, when that happens, a lot of people, they end up hating it. It's not what they got in for. Okay. So that's that. Now I want to say another word here about angel investors. One of the main reasons for getting an angel investor is not really the capital that they will invest in you. That's really secondary. The number one reason why you would want an angel investor is someone who knows the business that you're in. They've been there. They've done it. They've gone to the other side of the mountain and they've seen what's there. Having someone like that advising you, who has a vested interest in you succeeding because their money is invested with you, that's really powerful. They will be able to open all kinds of doors for you. They will be able to show you the roadmap of where these things go. A lot of times, these people have invested in other similar companies and similar things before, so they really know what it's about. Okay, so having someone like that on your side is the number one thing you're going to get from an angel investor. Okay, sometimes angel investors will give you cash. They will give you the capital, but they themselves are not really in the business that you're in, and they can't really give you expert advice. Okay, this is the truth of a lot of high net worth individuals, a lot of doctors and things like this that think it's kind of cool to invest in a local business, a local startup. And it's almost like buying a lottery ticket, because if you succeed and you hit the jackpot, they succeed with you. Okay. But they can't really help you with the business itself because they're doctors. And unless you're doing something in the medical profession, they can't really do anything for you other than just be a source of capital. So that's kind of the deal there. What else is there that I can sort of summarize very quickly with this? Look, if I was to summarize this is the advice I would have for a lot of young people that want to be startup founders. First of all, what you got to understand is that you are awesome. This is, it's a big challenge, but if you can crack this nut, if you can make it work, this will pay off big time for you. Okay. You will succeed far more at this than if you had gotten a conventional 9-to-5 type job. Okay. And don't believe all the baloney that people spout about this stuff where they say you have to work really, really hard. That's true, but it doesn't feel like work because this is your baby. This is your project, and it might technically be work, but it feels like a hobby a lot of times. If you do this right, it's going to feel like a hobby. Now, you put in a lot of hours, that might have consequences of its own if you have like a family and things, but a lot of times it can be a pleasure. Okay. And I'm speaking from experience here. So that's what I'll say. But then I'll say this. Number two, if you want to learn business, this is business, learn business. Okay. Learn how this stuff works. Okay. I don't want to keep coming back to my course, but I have that. But regardless, learn this stuff before you take money from somebody. Learn how money works, okay? Learn what you're really getting into, okay? That would be my biggest advice to people, okay? Then, the other thing I would say is that contrary to what is shown in movies and things, okay, the people that win at this game are the ones that can really start lean, the ones that take a hobby they're doing in their basement, that they're paying for the stuff anyway, and they're just doing it. If you could take that and turn it into a business, that's the way to do it. Don't be this thing where like you're going to get into something you know nothing about. You're going to need $100,000 to like launch it and start making your product. Okay, because it always costs more than you think. It takes longer than you think, and it's harder than you think. And you probably won't get to the finish line before you run out of money. If you are highly dependent on cash, you are bleeding cash every week to do this, chances are you're going to run out of cash. Okay, so start lean. Work on the really tough problems now instead of later. Okay, and just remember, the moniker "build it and they will come," that is false. It is probably the most false and misleading thing humans have ever said to each other. Okay, build it and they will come doesn't work. And if you don't believe me on this, try doing a startup and then come back to me in a year. Okay, so that's what I'll say. The reality is that people will not give you money because they don't believe in you, because at the end of the day, you haven't produced any results. This is the other reality. Okay, there are very few people that will just give money to a stranger that hasn't done anything yet. Oh, sure, they can talk really well and they've got big plans. But when you look at them and say, okay, show me some results. What have you actually done? Show me when you've actually made money through something you've created. You know, unless you have a long history of doing that, people won't invest in you. That's the reality. Okay, it's very, very rare to find that. And the only place where you can find people that will give you money under those circumstances are in those hot spots that I mentioned, like Silicon Valley. Okay, and usually they've done their homework, because for you to be worthy of their investment, people have had to know about you, and they ask around and they say, what do you know about this person? Have you worked with them? You know, what have they done? And if people don't know you and they haven't seen anything you've done, well, it doesn't really go very far. Okay. So start lean, start on your own, crack the big problems first. And if you start very modestly, but you get a little bit of success, people want to pay for your thing, and you deliver that, and then you sort of ramp it up and make something a little more ambitious, and people want to pay for that too. And you have evidence, you have money coming in, that's when people will invest in you. And that's the way I recommend. So hopefully that makes sense. There's so much more to this. It's a whole universe of things to learn, but hopefully this has sort of been a sort of compact summary of some of the things that are involved in this topic. So thank you very much for listening. You guys are awesome. Remember, this is one of the more tougher challenges of business, but it's among the most rewarding. And I wish you all the luck in the world. Thanks for watching and listening. You guys are awesome. I'll see you on the next video.